Hey, Kings and Queens, Saundra Fenwick here, your mortgage consultant. Thank you guys for coming and joining me for another Lunch and Learn Thursday. I appreciate you guys for checking in. Today, I have some great information for you. What you guys don't know, here at Mortgage Experts, we do what the banks do, but we also do what the banks does not do. So that is very, very important. We also can do a FHA, VA, USDA conventional loan like your average bank. We do down payment assistance. We do state and local government plans. We do a lot of things, but we also do what the banks don't do. We have what you call non-QM loans. They do not offer those at most brick and mortar banks or retail banks. So that's where we have a leg up. If you don't fit the perfect mold of having a regular job that you work with for 20 years and the salary, the 401k, but you do make money, you do have good credit, and you do want to buy a house and you have the money to invest in that, then we do have loan options for you. So I made another presentation for you guys. You're welcome. Hey. So I'm going to put my presentation up. I'm not going to keep you long today. It is a busy, busy, busy day today for me. So non-QM mortgages, expanding home ownership opportunities, presented by me, none other than the Saundra Fenwick, your mortgage expert. All right, the introduction. So non-QM loans do not meet standard CFPB criteria. That is the Consumer Financial Protection Bureau. So these are outside of the box loans that usually are funded by private investors. So there's a whole nother group of people. I have billions of dollars and I want to make some money off of it. So I'm gonna get in the loan business, right? And so they don't have to meet the CFPB guidelines because this is their own personal money that they're loaning you in most cases, not all cases, but in most cases. It's designed for borrowers with unique financial situations. So as I mentioned, you may be self-employed. You may get a 1099 and those taxes, you had to write off a lot of stuff and it looks like on paper you don't make a lot of money. So these loans will help you with that. It offers flexibility in income and credit requirements. So there are some loans where some of these programs where you don't have to have a credit score. There are some people around that do not even believe in using credit. So they don't have a score if you run their credit. So they do have loan programs for that as well. It's ideal for self-employed and non-traditional buyers. Again, you make your money, but it's not on paper the way that traditionally is tracked. So the bank statement loan, this has to be one of our most popular non-QM loans. So what we do is, instead of us getting tax returns, 1099s, and all of that from you, we use your 12 or 24-month bank statements to qualify you. So what we have to do is we go through all of those bank statements and we count up all of your deposits and we average those out by the 12 or the 24 months. And then that's what we use as your income. If you're using a personal bank statement, we can use 100% of those deposits. So you can be a small business owner. You can be a hairstylist, a barber, a tattoo artist, a chef, a food truck owner, and you can be depositing that money into your personal account. And we can use 100% of your deposits as your income. If you're using business bank statements, then we use 50% or more. It depends on what your expenses are. If we need to use 50% or more, we get your CPA to write us a letter saying what your expenses are, and most banks allow us to use more of your deposits. So again, there's no tax returns or W-2s required. The loan amount can be up to $3 million and up to 90% loan to value. What does that mean? They will loan you 90% and you have to put down 10%, a minimum of 10%. So, and the minimum credit score for a lot of these banks is 620. So these are really attainable to get. 1099 only loans. That's for those of us in like the real estate profession. If you get paid 1099 or you track your pay with 1099s every year, like a lot of realtors, lenders, LOs, a lot of salespeople, car salesmen, if you get a 1099, but you wrote off all of your qualified expenses and it looks like on your tax returns that you didn't make a lot of money, we can do 1099 only. For independent contractors with 1099 income, no tax returns or pay stubs required, loan amounts up to $4 million and a minimum credit score of 660. And there are interest-only options available. So this is major, guys. So all of my real estate professionals, if you want to buy a house, but your taxes doesn't reflect the money you really make, you need to give me a call. Second chance loans. These are for borrowers with past credit issues. So like I said, if you had to maybe, God forbid, a spouse died and you lost income, you had to spend the money paying off other expenses, or you had to file bankruptcy. So it accepts bankruptcies, foreclosures, short sales. You can do up to 85% of the LTV, the loan to values. Credit scores can go down as low as 620. So what does that 85% mean? The bank will loan you 85% and you put down 15%. And that's up to, so that's a minimum that you would have to put down. Various doc types are accepted: bank statements, 1099, profit and loss loan. You can get seller concessions up to 6% on some of these loans. So that means that because you have to put down 15% and may have to pay closing costs, that could be a hefty out-of-pocket expense. The seller can give you in concessions up to 6% on a lot of these loan programs. So that is major. So you're coming out of pocket with your 15%, and the seller could pay the rest if they are willing to do that, if you can negotiate that. Profit and loss only loans are big as well, because if you don't want to provide your bank statements, you can do a P&L loan. So you will get a certified public accountant, your CPA, to give us your profit and loss, and we can use that to prove your income. All right, see, that was a quick presentation of what we offer here. Here's my contact information. My cell 301-965-1155. I would love to help you guys with these products because they're awesome. They are something that you can do outside of the box. Now, we have a 1 day out of foreclosure loan. We have I'm in the full screen mode. Let me put myself back. Okay, we have a 1 day out of foreclosure loan. We have 1 day out of short sale. We have 1 day out of bankruptcy loan. If you have 15-20% to put down, you now have a decent credit score, at least 620. Now, I'm going to be honest with you. A 620 score may get you a higher interest rate, or it may cost you for an interest rate. So you want to work on getting your score as high as possible. But if you have the money to invest in your property, then please, by all means, give me a call and I can help you with that. You can put down more money if you want to. You can also pay interest only for the first couple of years. If you find yourself owning your own home and you've gone through some life events, or you're now self-employed and you need to pull some money out of your house, then we can definitely help you. We can refinance you into one of these non-QM loans, depending on what your circumstance is. A lot of people assume that they are not ready to buy a house, and they make their own assumptions based upon, oh, I don't make this kind of money, or I don't have it on paper, or I don't, or I went through a bankruptcy, or if you're back on track, like I said, even when I did my spiel about credit, your credit score only reflects what happened in your life the last 2 years, because whatever happened before that is not a positive or a proper display of who you are as a person. If you were consistent over the last 2 years of using your credit cards right, paying your bills on time, whatever happens, and I know a lot of stuff stay on there for 7 years, whatever happened 3, 4, 5 years ago is not relevant because now your credit history for the last 2 years shows that you're back on track. So it is irrelevant what happened before 2 years ago. So a lot of people will say, oh, my credit jacked. I got all these collections on there. I got this. But when did that stuff happen is my first question. Because, oh, that happened like 5, 6 years ago. I'm waiting for it to drop off my credit. 5, 6 years ago will not necessarily stop you from buying a house. But of course, it depends on what it was. If you have any negative history for any residential places, like you were sued for past due rent or you have a judgment on your credit, somebody sued you for something real estate involved, then that could pose a problem because when you buy that house, your house becomes collateral, and then that person that you have a judgment that has a judgment against you can place a lien on that house, and now the bank becomes the second in line to get their money if anything was to happen. Or when you sell the house or if you foreclose on the house, the bank becomes second in line to that judgment. So judgments we have to address. But if you don't have any judgments, it's just collections, charge-offs, it happened 4 or 5 years ago, please give me a call. Please talk to a real estate lender, a real estate professional about your situation, and we can find a way to get you into your dream home. Now, I know sometimes our videos can come off as if we're trying to make you buy a house or we're trying to push you to do something you're not ready for. That is far from the case. Most wealthy people own real estate, and they own several pieces of real estate. In our communities, we are behind, and there's such a large wealth gap because we don't own anything. We are the largest group of consumers, but we don't own anything. So I'm not on here trying to press you to buy a house because I make money off of it. I'm on here trying to convince you to start building your generational wealth. Start investing in things that you can leave to your children. Start investing in yourself because once you get homes in your portfolio, that opens you up to a broader scope of things that you can get. You know, it's more likely that you can buy more investment properties once you've had investment properties. Once you've owned your own home for a certain amount of time, then you qualify for a DSCR loan. You qualify to be able to, it's going to be easier for you to buy another rental property or a second home or a vacation home. These things, you stop giving away money to a landlord and help them build their wealth, help them expand their portfolio, help them get things for their family and their generations to lead to. I'm trying to urge you to buy your own property, to start building your own generational wealth, to reach out and build your own future for your children. And that's what this is all about. I'm telling you that we have ways for you to be able to build up your future and your children's future. Now, and every good deal, every home purchase is not a good deal. Let me start there. Sometimes people fall behind. Sometimes they fall into financial hardship. Sometimes they get upside down on their loan. Talk to a lender. Talk to me. Talk to your real estate professionals. Talk to a financial planner. We have a financial division at Mortgage Experts that could help you get back on track financially, and that could help you with investments and different life insurances, different insurances that you can get on your house, stuff that can help you set your children up for a brighter future. So these loans are not me. I hope it doesn't come off as if I'm like, Saundra, always trying to make somebody buy a house. What if I don't want no house? What if I'm not ready for a house? What you do is make a proper plan and buy something that you can afford, buy something that's attainable for you, come up with a plan, and then execute it, right? And I can help you do that. We can help you do that here at Mortgage Experts for overall financial health. So these loans are great because you've built your future. You've built a bomb business. You're making good money. You have expenses though. You have large expenses. So when you file your taxes, your tax return is going to look like you didn't make a lot of money. We have a solution for you. And oh, I got to put down 10%. I got to put down 15%. I got to put down 30, 40,000. Guess what you're doing with that money? You're parking it into an investment. If you put 10% in your house, you're building equity, and that money is sitting in your house and it's making money for you. So when you go to resell or refinance that home, you pull that money right back out. So what you're doing is parking your money into an investment vehicle that is going to make you more money in the future when you buy smart. So don't look at it as, oh, I'm taking all of this money and I'm putting it into. No, plan for that. You're going to make the money back. One thing we cannot do is live our life chasing money. What did I hear? I heard Jessa Larius, I believe, say that on the Breakfast Club one day. She said that she had gotten sick. She had appendicitis and she had to go in the hospital. And she said that she was upset because she had to cancel some shows while she healed. But her boyfriend or fiance or somebody said, you know what, money, you don't have problems making money. Money is going to come to you, but you have to take care of your health. If you have spent all this time building this money up, saving this money, then what is the point of having that money in an account just sitting, accruing 0.5% interest, when you can take that money and invest in real estate and start building wealth that way? So don't look at it as, oh, I got to put all this money down. Oh, I'm taking a chunk of money and putting it into a house. No, you're having a place to live. And while you have a place to live, you're building equity because you're paying on that house every month. And then you could be putting upgrades into it. You could be increasing the value of your investment. And then now you have this investment that's added to your net worth. So the more that house is worth, the more you are worth, because that's something tangible that you can sell and get your money back off of if you ever need to. So keep that in mind when you're thinking about down payment amounts. Just know that we have bank statement loans, 1099 loans, profit and loss only loans. We have 1 day out of bankruptcy, 1 day out of foreclosure, and a plethora of other products here at Mortgage Experts. So if you're interested in buying, you've talked yourself out of it because you're not a traditional borrower, then please give me a call and I will let you know what we have to offer for you. So this is not a long lunch and learn today. I'm going to get off because I have another meeting to go to. But you guys, thank you so much for tuning in. I hope this information helped. And if you have any questions, please comment. Please inbox me on any of these social media platforms and call me at 301-965-1155. Okay, thank you guys. I'm going to put this back. My contact information. You guys can go ahead and make a screenshot of that. It's my email, my phone number. And if you would like to start an application, go to approvemesandra.com. No W's in front, just approvemesandra.com. All right, guys, have a great day. Thank you for tuning in. Love y'all. Bye.